This is the Scrap Metal Commodities Recycling and Economic Report by BENLEE and Raleigh Goldsboro Recycling, March 12, 2018. Last week, commodity prices were mixed and many economic reports were positive. U.S. steel production rose to a new multi-year high as most markets remain solid. New tariffs have not kicked in yet, so it's not clear what may happen in the weeks to come. Oil rose about $1 a barrel to $65.68, remaining near the multi-year high of a couple of months ago on good global demand and supply. U.S. oil production hit a new high as there was word that OPEC may boost production to drop prices to get the U.S. to stop these record numbers driven by low-cost U.S. shale production. Iron ore fell $4 to $76, down but still pretty high on good global demand balanced with good global supply. Scrap ferrous prices rose about $10 to $20 gross ton on good demand, but with supply lacking a bit, prices are up to spur demand. Hot dip galvanized steel rose $30 to a new multi-year high of $990 a ton on news of the tariffs and good demand in many markets. Copper rose a penny to $3.14 as demand from China remains weak, but prices remain near December's multi-year high. Copper is down 2 cents this morning to $3.11. The 5-year chart shows copper just slightly off last December's multi-year high. Copper inventories fell slightly on a good balance of supply and demand. Aluminum was down 2 cents to 95.1 cents, slightly down from the multi-year high of 2 months ago on good global demand and supply. Tariffs should increase this soon. Aluminum LME inventories, while up a bit, remain near about 8-year lows on a good balance of supply and demand. President Trump announced he will exclude Canada and Mexico from the recent tariffs. China remains a huge trade issue, but China is not a direct U.S. steel trade issue. China is not in the top 10 of countries that ship steel to the U.S. January's U.S. balance of trade was the worst in about 9 years as we imported $56.6 billion more than we exported. Overall, imports were actually down, but exports were down even further. China alone represents $36 billion of this problem. Many think China's low cost of labor is the key reason we have a major trade deficit with them. Germany is one of the highest labor rate countries in the world. They have a major trade surplus and getting even better compared to our deficit. They export much more than they import. One of the U.S. trade issues is also auto production. There continues to be stories about Mexican auto production moving back to the U.S. But Mexican auto production just hit a new historic high for any February, and exports of those vehicles hit an all-time high as well, with 71% of them going to the United States. U.S. non-farm payrolls had a great month and grew by 313,000, the highest growth since July 2016, with construction and retail trade growing the most. With large numbers of people joining the workforce, the unemployment rate stayed at a steady 17-year low of 4.1%, a great performance. A key issue is that in the U.S., only 63% of the people over 16 years old or older that could work are working. 37% of our population is not working. The good news is that this rose a bit last month. We need to get these people back into the workforce to fill the jobs that many of us have. Wall Street had yet another turbulent week, with the Dow ending up 778 points, erasing last week's losses and ending at 25,325 with a continued optimism on the economy. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.